All right. So welcome to Game Plan Sunday. Today is March 28, 2021. Had a pretty interesting week last week. We had a couple of testimonies from the Fed, Chair Powell, and then we had Secretary of Treasury Yellen with their speeches that concluded last week. We also had the blockage of the Suez Canal, which is inflationary, obviously. So we can get into that a tad bit here. But those are some of the main events that we had last week that, investors should have been paying attention to. When we take a look at the markets, what was moving? Well, S&P 500 was up 1.57%. Dow Jones was up 1.36%. The dollar was up 1.7%. Everything else was negative. NASDAQ was down negative 0.58%. Gold, oil, the Russell 2000 was down big time, negative 2.89%. I wasn't even expecting that. And then Bitcoin was down negative 7.44%, which you got to expect that. Bitcoin is a big mover. It makes big gains, and it takes, suffers big losses. It's very, very volatile. So again, if you trade in, Bitcoin or any cryptocurrency, you got to tread softly. That stuff is really crazy. It's like riding a roller coaster. And then when we down into the sectors here, the leading sectors last week was the real estate sector, which we're seeing that, nice, trend, on the weekly charts. I can go over that with real estate sector. The consumer staples sector, definitely was expecting consumer staples to go up, was up 3.31%. With a lot of spending, saw a lot of traction over in Walmart, Costco, BJ's, all those names. They were looking pretty good, driving up that sector. So again, people coming out in the market and the economy, spending money, we're expecting to see that to take place. Definitely got that. Technology stocks were up 2.37%. That was, number 3 sector that was moving there. And, pretty much everything was positive except for consumer discretionary and the communications sector. But everything else was, positive, energy, industrials, financials, healthcare, all those sectors are actually up pretty good here. So now what was interesting is that the Treasury yields, okay, the yields, they went down last week. So when we saw, the market started off pretty good, and that's because the yields were down. So actually take a look at the yields here. We saw the yields going down here. Just take a look at the 10-year yield for you guys here in the middle. Let me actually get my annotation together. All right, so we saw this right here take a dive down. Okay, so as that was going down, the markets was actually getting some relief because, again, the whole fear of inflation, is real big, because the markets is basically saying they don't believe the Feds contain this thing as they claim it. Everybody already knows at this point, inflation is coming. But, the way they got to spin the story, they always got to, try to hypnotize you with some mythical, magical trickery to make you feel and believe that, they got it under control. Because, again, it's all psychology. Everything we're doing is all psychology here. And so when the yields started going down, the markets were doing great. They were actually doing pretty good. But at the end of the week, we saw the yields start to tip back up in that kind of motion. You can see like a little swoosh right there. It's coming back up again, right? So that dipped downward and that's coming back up. Then you have the markets that started selling off. So we got up to, I think, 1.74%. And then now we're at like 1.67%. This is still pretty high. If you take a look, this is still higher than the pre-pandemic levels right up in here. And I still got this mark here, this little annotation here is going to this zone here. This zone here lets me know this is 2%. Right here is that 2% target right there, where if I can get this thing removed here. So basically that 2% target is where basically there was a TD Securities analyst basically said that, if this hits 2%, we'll get a 10% correction in equities. So I want to make sure that I got that on my radar, that I'm aware of that, because if that was to occur, you definitely want to be prepared. So I don't know if we're going to see that anytime soon, but that would definitely be drastic on the market. So again, the name of the game. We still got to watch this whole inflation time that we're in right now. And, you know, I find it crazy that you have a situation like what occurred last week with this big ass ship that's stuck out in the Suez Canal. And you got to understand, you know, this world economy that we're in, we have all this international trade, a lot of goods that we have. I think 12%, I believe was what the reports were, at least 12% of the global goods have to flow through this passageway. It's like a shortcut through Egypt and all of that, instead of them having to go around Africa to get things out in the world, basically. It's very efficient. So you got to understand with economics, it's all about the efficient allocation of scarce resources. So in the markets, they figure out a way to get things faster. This is a benefit to the entirety of society. But when you have just randomly, you know, at a time that we've been talking about inflation for the past months, I've been talking about it at Game Plan Sunday. We've been dropping videos out there. Make sure you guys like the videos and share those things, you know, because again, that's the only way we're going to get popping. And, you know, the algorithms, everybody tricks the algorithms, right? Nobody's popping just because they actually have good value. They trick the algos. The algos don't recognize content, value of content, just recognize activity. So whenever you see a Wallstreet Jackboyz video, make sure you like it, hit the heart. I don't even care if you put a frowning face, just as long as you interact with the video. It'll help the algos carry us up in the feeds, whether it's on YouTube or Facebook. So anyway, when you see the videos, make sure you do something, comment on it. I ask a lot of questions. I don't know it all, gang. And right now we're all learning. We're all learning this stuff at the same time. So I would definitely encourage your participation when you guys see, you know, the video content that's out there. So that we can actually get a bigger audience. I remember, listen, when we started with I used to actually teach over at the Bullish Bears community, and we actually helped grow that community. And what was exciting is that people showed up every day, right? And people just showed up every day, wanted to really be a part of it. And so I would like to see that level of participation here, because, you know, this is our baby, you know, and, you know, we're doing things in a great way. Not quite sure if everybody quite understand the value that we're offering, but definitely you guys, you know, want to help. This is the way that you can help. Share the content, like the content, or whatever the case may be. The algos can, you know, pick up the activity and then start posting stuff. Anyway, so for the past month or whatever, I've been talking about inflation. A lot of other people have been talking about inflation, like Michael Burry, Dalio, all these guys. We've been seeing it. And it's just a logical conclusion that that's what we're going to have. And so, you know, with that expectation is that the Feds is going to have to raise the interest rates prematurely. And they're telling everybody that they're not. Right now, we can see interest rates are right here. They're controlling. You can see they're keeping it, you know, down, suppressed. Okay. So this is encouraging a lot of reckless behavior that we're seeing in the markets. We've seen a lot of, you know, people taking out more debt. You know, people trying to get homes. We had home numbers that came out also. And there's a shortage of homes right now because a lot of people are trying to take advantage of these interest rates before they go up, you know, because this, you know, belief in the markets from all this inflation. We're seeing that the Fed is going to have to use their tool. And Jerome Powell, he keeps on saying, oh, we have tools to deal with it. Well, again, the tool that he's talking about is raising interest rates. That's the only thing they can do. So, you know, with them basically raising interest rates, but they're telling everybody that it's going to be temporary inflation. So they're not going to have to, you know, go into that measure. But if they need to, then they will. Right. So anyway, that's just the whole theme of what we have going on right now. So I just wanted to cover where we are at with the bond yields. Again, you know, when prices of bonds go down, yields go up. It's got this, you know, inverse relationship. So this is on the website also. So make sure you're on the website, just in the little search magnifying glass, you type in yield curves. You can play around with this. You got all the different, you know, yields over here that you can play around with. Okay. You can also change the years. If you're doing your studies, you want to see, well, how was the environment when Obama was president or when, you know, Bill Clinton was president or Bush was president. Like you can use this tool here for your research yourself. This is actually what the yield curve looks like on a daily basis here. So just to take a look at it from this view, the 10-year yield, which is got right here, 1.67. And basically the target is up here. And they're just basically saying if we get here, then the markets will have a correction at 10%. This is, you know, what TD Securities Analysts is talking about. And the short end of the curve is anything under 1 year. But the Fed's basically controlling this down here. So anyway, but that's all of that. let's actually get back to what is shaking in the markets. Okay, so that is one of those factors, the yield curve there. Also, we got a nice shout out from Danielle DiMartino Booth on Twitter, and she is pretty dope, pretty awesome. Worked on Wall Street, worked for the Federal Reserve, very bright individual, and she has lots of market wisdom that, you know, again, you guys can check her out. But she gave a little Wall Street Jackboyz. You know, she liked our tweet. She responded to one of my questions or what have you. And I just thought that was pretty cool because I have a lot of, you know, big boy names that's been coming out. You know, George Gammon. We had him. We had the guy from Tasty Works. I forgot his name. We had him like a month ago. And now we got her. So, you know, again, we're talking big boy talk. So when the big boys recognize other big boys talking, they interact with us. So, again, I know y'all probably don't see millions of people that's on the website every day, but make sure you show up every day because we will get it popping. You know, those other trading groups out there, they can't articulate all these matters that's happening to help you to navigate through this time frame. They just tell you how to trade. You just trade, which is typical in a bubble environment. So we'll go over some of that here in a second because you're going to see on the news feed what's going to drop. Right here in the feed, we got the temporary supplementary leverage ratio is going to expire on March 31st. Okay, so on March 31st, this is on our calendar. Remember, there's no other trading website like this, but this is your dashboard. Your calendar is right there every day. You can look for the whole year because I already put in the work. So I hope you guys appreciate the value. All right, so March 31st, this is a big event that's happening. Right? Nobody knows what's going to happen, but last week, Fed Powell, he had a speech. I watched it. Jonathan watched it. A couple of people watched it live in the chat room. We're watching these things, and we're, taking a look at the markets, assessing, breaking it down, seeing how the market's reacting. But somebody asked him about this whole SLR thing. I'm not too familiar with it like that, right? But somebody asked him about it. He said he didn't want to answer the woman's question because he said he was going to have an announcement about it, you know, in the next couple of days or what have you. But the deadline is coming up this week on the 31st. Our calendar is marked. So when you on the website on a daily basis, you can see what important events are happening. Like right now, Game Plan Sunday, you feel me? So, but this event is coming down the pipeline, and I don't know how the market is going to react because we don't know what the outcome of it is going to be. So if I can actually jump into it just a tad bit to elaborate, I'm going to try to get through it quickly. I know I got a lot to cover here. But basically, oh no, this is the calendar event. So let me actually go back to the news feed. But you guys can see it says the federal bank regulator agencies today announced temporary changes of the supplementary leverage ratio for depository institutions issued on May 15. It will expire. The temporary changes made to provide flexibility for depository institutions to provide credit to households and businesses in light of the COVID-19. Okay, so the financial markets is very convoluted. All right, I'm telling you right now, you got people with PhDs that don't even understand some of this stuff. I myself don't understand it all, and I study as much as I possibly can. But the cool thing about having a community is that you can interact with other people who's putting studies. So you have to study. I can't be the only person studying. Other people got to study too. And then you bring back the knowledge that you have gained, and we can triangulate that information to try to make sense out of what's happening. You got a lot of, this is what analyst teams do. This is what they do on Wall Street. Analyst teams, that's why they hire analysts. Get all smart guys, have them doing research, all right? You have the traders, they do the execution, but they're, looking at the research, they buy research from bankers and stuff like that. So, but this SLR situation, again, it's like one of those, in 2019, we had a situation with the credit market for the banks lending to other banks overnight, right? And the markets crashed over that situation. So we could be looking at a situation like that if this thing doesn't play out well. I know that in the meetings that they had last week with the Fed and the Treasury, Democrats were actually, talking about it. I think Elizabeth Warren, they're pressing, the Federal Reserve about them, removing this stuff. Let's see, here we go. Fed will not extend the pandemic crisis rule that had allowed banks to relax capital levels. Yeah, so they're basically saying they're going to let this thing expire, but we don't know. There's people that, again, we'll find out this week, so just keep your eyes on it. But we do know that, let me see. Chip shortages has Detroit automakers struggling. This is interesting because you already had shortages every time we looked at the PMI numbers for the past, 3 months. And now you got the Suez Canal blockage is blocking millions of dollars of goods on a daily basis, is you're not going to be able to get it. You know, backlog orders are going to be crazy. And again, you have more money in the system now, but you got fewer goods. All right, you already got, goods, products that people are trying to get. That's already shortened already. We've been seeing that. We've been talking about it through the PMI numbers. And then you get this shortage here. It's going to delay whatever goods are available for, people to get it anyway. So again, taking a look at these kind of things are leading indicators so that you can forecast in the way that I do. Right. So I try to teach you guys like all this stuff. Oh, that's the housing data right there on the site. Here go the videos. So if you wanted to hear from Powell and them themselves, instead of me paraphrasing, you can watch it right here on the news feed. And again, I know some of you guys are addicted to fascist book Facebook. I built this site so that we no longer need Facebook. So again, I know it's hard to get you guys to transition over. One day we'll roll the app out, but we need enough users for that to make sense for me to even put it out. Because if I'm doing this for myself, there's no need for me to put all this money into building Wallstreet Jackboyz and don't nobody want to participate, right? So that sends a signal to me as an entrepreneur that I don't need to be, wasting my time on this if you ain't gonna show up. All right, so I'm trying to provide a value for you guys. But anyway, it's really, really interesting to see how they're gonna react to all of this stuff. The Democrats are already pressing, the feds about this. So all this information is on the website. You can check it out. And while I was out, there was a couple of shootings that happened. All right. We had the Atlanta shooting that, blocked my transportation. I had to take alternate routes and stuff like that. Then we had this Colorado situation, and that made things interesting because I remember talking to this one guy at a gun shop, trying to get some ammunition, could not get any ammunition. But he had some ammo, but he was taxing. And I was like, $50 for 50 bullets. And last time I bought bullets, I thought it was too expensive then. I think they were like $30 a box. And that's expensive, right? But the guy, it was funny because he was like, man, I spent $47 on it. I'm only making $3 off the bullets or whatever. Sell them for $50. I'd rather have some than not have any. I hate to have to sell it to people for this price, but it's already gone. This was already before the freaking shootings. Okay. So I already, anticipate like, okay, when they had these shootings, people are going to be going crazy, hurting, trying to buy guns and ammo because they're afraid of, the bureaucrats' position and how they're going to interact with that. So the reason why I cover the politics, some people don't understand, is that think about politicians as the regulators. You remember Warren G had that song, him and Nate Dogg, regulators. Hold off, right? That was it, right? So this is the same thing. Like you got to pay attention to the regulators, and they're regulating the money. They're regulating the economy, So you got to pay attention to what these politicians are talking about. Situations like this, you have gun stocks, ammo stocks. You can check all those out. We got watch lists for them. You can capitalize off of that kind of information. All right. So I pulled these tweets here from Michael Burry. You guys know the guy from Big Short. Michael Burry. He was tweeting before the SEC came and paid him a visit. And next thing you know, he just deleted everything. And these tweets have surfaced. They resurfaced. This is what he said. He says, I just captured these here. OK, and this is on the website in the Legends and Gurus group. You can look for Michael Burry's name as one of the Legends and Gurus. The U.S. government is inviting inflation with its MM2 tinge policies, brisk debt, GDP, M2 increases while retail sales, PMI stage V recovery, trillions more stimulus and reopening to boost demand as employee and supply chain costs skyrocket. I mean, this is February 20, so this was before, I guess, the Texas climate situation with the snow and all that, before the Suez Canal. We've all been seeing inflation that's going to be coming. He says, do not underestimate the power of stimulus checks. This chart compares the M2 money supply. This is where, they put the money in the system to QE assets to direct cash payments. Those checks play a big role. And unlike QE, direct payments don't trap inflation in the securities asset markets. People complain all the time about income inequality, wealth inequality. I wrote an article a couple of years back. Many people didn't read it, but that's my way of trying to, warn people. Hey, you need to get assets because when the feds put money in the system, it always goes to the assets. I mean, that's just the way it is, and they can't stop it. So it's ridiculous when you see these hearings and you got these politicians, of course, it's normally the Democrats, that ask them, what can the feds do about wealth inequality? Well, they got to stop putting money in the system. That's what they have to start doing. But as they put money in the system, it goes to the financial assets first. So you see stock market, rise, real estate, all those things are going up. These assets are things that poor people don't have, so they cannot participate in the wealth creation. But that creates, more tension between the haves and the have-nots. So you have, people who don't have, they become more jealous, more angry, and you get a lot of backlash, and they're asking their politicians to do something about it, right? And so that's why I talk about some of the politics sometimes. I don't really care much for the politics, but it's just the way it works. And we look back at history, we can see over and over again how these things play out. So Michael Burry, that's, this guy's study, all right? And he's coming out and he's, giving the warnings. He said, people say, I didn't warn last time. I did, but no one listened. So I warned this time, and still no one listens. But I will have proof. I warned. This is what he said. If you guys haven't seen the movie Big Short, make sure you go and do yourself a favor and watch the movie Big Short, because this is the guy who predicted the whole thing, right? So check this out. He said, before the German hyperinflation in the 1920s, some of y'all too young, you don't know about the hyperinflation, you haven't studied hyperinflation. None of these things are brand new. They've happened over and over again. But Germany hyperinflation, this is something that really happened. When you see people that were paid in wheelbarrows of cash, okay, and the cash was worthless. That's why they had to have so much of it, because it took like $1 million to buy a loaf of bread. Can you imagine paying like $1 million for a freaking loaf of bread? Like, geez Louise, that's crazy, right? That's hyperinflation. People was actually just throwing the money in the fireplace, just burning it up to heat their home, because it was cheaper to just burn the damn paper, to fuel your home. But he said, before the German hyperinflation in the 1920s, everyone from the elevator operator up was playing the market, and volumes became such that the financial industry could not keep up with the paperwork, and the bourse was obliged to close. Sound familiar? He says, Robin Hood down. Remember all the Robin Hood situation, right? And we're still seeing these stocks, these Wall Street, Reddit, Wall Street bets, or whoever these guys are with these forums out, pumping stocks, right? That's why y'all missing. Y'all over there on Wall Street Reddit page thinking that they got the magical crystal ball that you're going to get some free. That's what it is. That's why y'all ain't showing up. Okay, I got your number. No, I'm just kidding. I don't tell people what to trade. We don't do that, but we provide the information, and then, we trade what we trade. You can see the ideas, but the whole idea is to have knowledgeable traders that know what they're doing, okay? So when you know what to do, when you see Jonathan post a play, or you see Mark post a play, you can assess it and take a look at your risk management and see if that's something that you want to be involved in, instead of blindly following people. That is not how we run things over here at Wall Street Jackboyz, and I will never do things that way. So if if that's what you want to go follow those other guys, if you don't want to learn, then I don't want you in the first place, right? 'Cause I'm trying to build a community. I look at all you guys as my brothers and sisters. I'm not, the guru or whatever the case may be. We're colleagues, right? We all doing research. We're trying to get this money all together. So that's what it is. Anyway. So he says speculation alone, while adding nothing to Germany's wealth, became one of its largest activities. Trading, speculation, trading alone. That's what people was doing. They weren't being productive or anything at all. They were just trading. This add no value to Germany's wealth. Okay. It's just speculative activity. He said the fever to join in turning a quick mark infected nearly all classes. A quick buck, a mark was the currency they used, right? So to turn a quick dollar infected nearly everybody's, right? Everybody was trading. And the effort expended in simply buying and selling the paper titles to wealth was enormous. Everyone from the elevator operator up was playing the markets. The volumes of turnover and securities on the Berlin bourse became so high that the financial industry could not keep up with the paperwork, even with greatly swollen staffs of back office employees, and the bourse was obliged to close several days a week to work off the backlog. This sounds very, very similar to today, right? You have these SEC, Robinhood having to stop people from being able to trade because things are getting crazy out of whack. This is a speculative bubble. And actually, it reminds me of the .com bubble also, like what the time that we're in now. And so in this time, it's hard for you to tell a fool that he's a fool when he's making money, right? So everybody makes money when the market goes up, but it's when the markets get choppy and the markets go down. If you never got the training, then you're going to be like, oh, what happened? So you see everybody bragging their show their profits and all this other stuff when the markets is going up, right? But they ain't showing you those huge hits that they're going to take, right? So don't be a sheep. I don't want no sheep over here. I just want only knowledgeable people, okay? We got to strengthen the weakness. And those who haven't, make sure you just being in the chat room every day, you're going to learn something, all right? even if you don't take the course. But I definitely advise you to take the course. So anyway, that's on the website. That was pretty good. Ray Dalio, this came from Topaz. Shout out to Topaz. She always come through and help out. Gotta love it. So she came in and dropped this on the feed. Ray Dalio sees good probability that Bitcoin gets outlawed. All my Bitcoin people, I've been saying this for years, and I met with my guys and I told them, you have to use your logic here. But this, you guys can check it out here from Dalio himself. And basically, everybody knows the story. The government wants control. If they can't have control, then that shit ain't gonna rock. And Bitcoin is supposed to be the people's money. It's decentralized, currency. All right, it's decentralized, meaning that the government can't control it. The government wants nothing more but control. Okay, but it's interesting to see the government allow Bitcoin to play out, and nobody's asked good questions. People just like, oh, well, Bitcoin this. And I'm like, okay, well, Bitcoin is, cool. I'm not hating on Bitcoin. I see a danger for Bitcoin. So I'm calling out just the logical conclusion of this whole thing. Okay. The logical conclusion, it will lead you to the path I'm telling you, that because they can't control it, okay, they're not going to compete with it. You understand? If it becomes competitive, right, where people rather use Bitcoin than use the dollar or whatever currencies, they will outlaw it, as they've done everything in the past. They already banned Bitcoin in other countries before. India's talking about banning Bitcoin right now. And so you have to understand that is a risk. But right now, yeah, people can make money. It's speculative. It's just going up crazy. So get your money while you can get it. But at the same time, I wouldn't put a lot into it, just for that perspective, for that reason. And Dalio, even if you go in the Legends and Gurus group, which is right here, he talked about this a while back. Right here is where it's at. Excuse me. He talked about this a while back. I posted, the research from him and his team. They did a research about it, and one of the reasons why Bitcoin has been going up is because of the anticipation of the Fed destroying the economy. Actually, to keep this thing going, they're gonna have to destroy the dollar. And so you're seeing capital flights, people getting out bonds. He keeps telling people bonds and cash is trash, right? Like, why would you do that? You're negative. You're not making any money. So you have to put risk on when safety doesn't give you any yield. Bonds are safety. They give you no yield. Now you have to be risky. This is the ingredients for bubbles. Okay. So nobody putting money into safe asset classes. You have to take on risk, which is stocks for the most part. Now you have Bitcoin, which is even worse, more speculative, cryptocurrencies, all of these things, Dogecoin, whatever. And so we're seeing money flowing into those other things, which, as far as money perspective, the cash in your mattress, you lose money. So instead of putting money there, I mean, you might as well put it in Bitcoin or put it in something, because at least you're going to make some money. Leave it in cash, you're done. Leave it in a savings account. I just told you guys the interest rates. They're nothing. You're actually negative, okay? Because inflation is going to eat your ass up. So anyway, but this is good insight from Dalio. You guys can check it out. Germany, with this whole Easter lockdown thing, Merkel, she actually reversed the orders on this thing. But it's interesting because, all these Fed people that keep on talking about, vaccines is the key to reopening the economy. I've never seen a time ever in history, health, anything dealing with, health is the key to, getting the economy back together. That's just ridiculous to me, right? But it is what it is. They got to, it's all mental security stuff, mental things in our brains. But anyway, you see in Europe, these European countries, they're talking about they're seeing cases going back up. And so if they see cases going back up, they're going to want to put you back on lockdown. Okay, that's going to be very problematic. Here in the U.S., states are starting to open up. I don't know if you stepped out of your house. Some of you are too scared to leave the house. You spray, you're going to die because AIDS in the air is going to kill you. The Rona. But that's just actually not happening, right? People at restaurants are not getting the stuff and dying when you sit down, which I eat out often. Take your mask off. Why you even got to wear it in the first place? You're going to sit down because if it's AIDS in the air, everybody in here got it, right? But anyway, that's not picking on anybody. I'm just, got to get you guys to start, thinking critically through this stuff, this whole pandemic or plandemic, if you will. But they're locking everything down. And in Europe, they're looking to get back, locking things back down. That's going to be problematic. If the U.S. follows, we're definitely in trouble. So hopefully that doesn't happen. Ray Dalio here, he talks about, he dropped this whole, feed here. Are we in a stock market bubble? Okay. Wisdom for you guys to check out. We got the charts right here. This actually sub charts over here also. Okay. So, basically he's just telling you the signs of a bubble, his indicators that he used at Bridgewater, which Bridgewater is the largest hedge fund, in the world. So he's been releasing this stuff to us, and, it's up to you to use it, for your advantage. But this is what the top dog is using, how you're assessing everything. And he's basically telling you that we're in the bubble again. All right. I'm going to just go skip past it because I know we're a little past time here. Zuckerberg says he backs changes to controversial Section 230 law taxed by Trump that protects internet companies. Yeah, these companies are fascist. They are extensions of the government. They are doing the government's will. They're facilitating vaccines and all kind of crap instead of them doing what they should be doing is, delivering the best value at the lowest cost to its citizens. They're actually doing the will of the government. Student loan stuff. Powell and Yellen game plan is evocative to the World War II playbook. Here's what happened then. This is a more positive tone here. We've got the analysts here. They're supporting the Fed. So this is just to give you another insight from a different perspective on what's happening. And you guys can check that out. Fidelity applies to launch a Bitcoin ETF. And again, they definitely want to get everybody to mentally adopt a digital currency. So right now you got everybody just pumping, these Bitcoin things. But eventually they're going to launch a digital dollar, and they'll outlaw or ban whatever cryptocurrency is popping. And at that time, everybody will be acclimated to the digital world of no physical money. All right. And so somebody even asked me, one of my friends asked me about like NFTs and stuff like that. I got a couple of videos talking about NFTs. It's just crazy garbage to me. It's ridiculous, but it's a new mental adoption to get people to try to rearrange what your values are, right? Like I said, I had a friend of mine who buys stars, and to me, it's ridiculous to say that you can buy a star way out there in the sky. And she showed me, she's like, this is the star I own. My dad bought me this star, and I bought this star. I'm like, what? You can buy a star? People are buying stars. There's nothing you can do with it. All right, it's just ridiculous. The NFT is kind of the same thing, man. This is stuff, but it's digital. It's like digital art and stuff like that. That whole situation is just crazy. Capitalism is dead. Long live debtism. This is a good article too. You guys can check that out. It's not from my school of economics, but it's still a good, read for you guys. We had the unemployment numbers that came out, 684,000 versus an expectation of 730,000. It's still pretty bad, but again, they revise these numbers all the time. So we're still over 600,000 people filing for unemployment every week. This is still bad. So again, the stock market going up, but the economy is bad. The Feds, and the government is giving people money. That stimulus money is probably already gone, spent somewhere. And I posted it in the group on Facebook, and I want to hear from you guys. When do you think the next stimulus is going to pass, and how much you think they're going to give? Because again, the way I see it, they're going to have to keep cutting checks because they're not going to get the inflation targets that they're looking for. So quite naturally, they're going to constantly, give more money because the economy is stagnating and they don't want deflation. So they're, trying to keep up. But anyway, that's what's happening. Again, Danielle DiMartino Booth, she rocking with us here with Wallstreet Jackboyz. Check her out. Okay, that's a transcript. Suez Canal situation here. The SLR situation is right here. Feds face tough choices as banks' capital relief deadline looms. Analysts are split on whether returning to the pre-pandemic supplementary leverage ratio could have unintended consequences. The current flexibility for big banks' SLR ratios is set to expire March 31st, at which point banks' holdings of U.S. Treasuries and deposits at the Fed would once again factor into those calculations and force banks to hold more loss-absorbing capital against those assets, okay? So this is really important. Investors have become increasingly nervous about the potential market impact. I'm going to just go over the highlights. Big banks have argued that letting the capital relief expire could have negative consequences, okay? They do not want the Feds taking away the punch bowl, okay? JP Morgan's chief financial officer recently said that without an extension of the SLR relief, the banks may be forced to shy away from taking new business and redirect larger customers elsewhere. Okay. The SLR is going to go away eventually, but with all this uncertainty now, it would just seem to make the most sense to keep the SLR in place for 3 to 6 more months. So they're begging the Feds to keep this thing going here. Somebody said if that happens, some investors could push up their expected timeline for the Fed to begin pulling back its support for the U.S. economy. And that will go against the message from the Fed. They're calling the Fed bluff again, that it will be patient in raising short-term interest rates and reducing this $120 billion per month in bond purchases. And Garvey says that will create problems that they don't really need to be dealing with right now. We got a whole lot of problems that we don't need to be dealing with right now, but we have to. So that's unfortunate. It's looking problematic here. This came out. Feds say banks will have to wait until June 30 to start issuing buybacks and bigger dividends. So because of the COVID pandemic, they were not able to buy back their stocks or pay out dividends. So that, that wasn't good for these financial stocks. But this past week, the financial stocks were actually rising. They're actually looking good at the end of the week when this came out. So this is good news for, financial stocks because, their shareholders, they get to get the buybacks and they get to get the dividends after June, though. But the news alone is actually moving that sector. SEC cracks open probe into blank check company IPO mania. Again, this is more, bubble activity. When the SEC is trying to come in and do their regulation thing, check that article out when you get the chance. H&M gets wiped off major Chinese apps after an old statement about forced labor reappears. That's interesting. I'll try to make it brief, but I got to elaborate on it a tad bit. So H&M, they said something about, I guess, the Chinese government or with this, was it Xi Jinping, with this whole Muslim situation. And, America is basically trying to tell China what to do with their economy, their society. China is not going for it, period. You feel me? But, Biden, they playing politics. And so these companies, they try to do how they do here in America, play politics, China not having it. So China erased these companies completely off the internet. So if you want to go look for them, you actually can't even get it on the internet. You can't buy nothing on the internet. They're still open physically. But, if the government comes in, mess you up, you can't make no money. You feel me? And you got to compete with other people. So, I got, one of my guys, he's Chinese, of course. And, he's all about the Chinese capitalism. And I understand how that works. But U.S. capitalism, Chinese capitalism, two different things. You got to understand. Chinese capitalism is based off of Confucianism, the religious system. And America's is based off of Judeo-Christian principles, which is the two systems is America's individualism, China is collectivism. China is more like they claim it's like this family thing. You have to put the family first. But in this case, it's the collective. OK, in America, it's individuals first. When you break down the economics, there is no collective without individualism. You got to understand that a group of people are made up of individual people. OK, but the problem is when you have a group of people, that group of people has a leader. OK, or leaders that are individuals. And normally with these collective situations, they turn into tyrants. OK, if you disagree with the collective, you become a dissident and they got to silence you. They kill you in other countries that kill, dissidents, silence you, cut you off Twitter, cut you off Facebook just because you have a different opinion. In America, the individualism that, that's what this country is built off of. You have the right to like what you like, want what you want, and all those things. And as a collective, you can actually choose to be a group if you want to, but you're not forced to be in a group. So you got to understand the two different systems. I tell these people all the time. China is playing capitalism better than America right now, but still, you need to understand the two systems. China's been playing capitalism better than America because they're more free with less regulations, less taxes. All those things is dampening down the business. And the problem with, the situation that we have with, Biden and the Democrats, you think about it like this. If you watch the Marvel movie, The Avengers, and right now I'm getting ready to watch that DC, Justice League thing. So I got to get into it. I know it's like 4 hours long, but the Marvel Avengers movie, you take a look at Thanos. Okay. And I call it the Thanos effect. They did an awesome job. Thanos, bad guy, but they humanified him, right? He's not like, devil with horns. The guy has a heart, right? Thanos believes, he saw a future that nobody else can see. And he saw destruction of humanity because of scarce resources, and they were overpopulated. And so Thanos decided to take matters into his own hands without involving anybody into the decision because of the future that he saw. He didn't ask anybody or nothing. He just told everybody, I got to kill everybody. All right, I got to kill, not everybody, but he killed half of Marvel Universe. I hope you guys have seen this movie because I don't want to spoil it if you haven't. But he killed half of humanity for the greater good of humanity, right? This is the problem which you have with people, with this, collective idealism, socialism stuff, all this stuff, with justice and all these, principles of this, because, you have, what they do is they are asking the government to deliver them justice. And the most just system is capitalism. The markets is the most just place. Okay. Now, the problem, and to the defense of the socialists out there, the problem in America is that we are more socialist than capitalism. And a lot of people don't know this. So we shout capitalism all the time, but we're a mixed economy. And in this mixed economy is a spectrum. OK, it's a spectrum of, pure capital, pure socialism, pure capitalism. OK, so right smack in the middle is like your midway. Well, America is more this way. We're like closer to socialism than we are to capitalism. You can't never have a perfect system, but you want to get as close to, what spectrum you want. Capitalism is a productivity system, okay? People are productive. You have goods and services are being produced. That's a problem that we have right now where we're not as productive. America is a service economy. Nobody's making anything. Everybody's on the phone doing customer service or some kind of restaurant job or something, but you're not making nothing. But guess who is? China is making everything, okay? And so China is growing faster than America, and I quite don't see that we are going to be able to stop it. It's not going to happen. China is going to be number one at this route because we're on a welfare state. You're dependent on government. That is problematic. So it's not that we're against not having people to be taken care of and things like that. Well, that's why you have charity in the free market. For years before we had all these welfare systems, charity took care of people. Even in the Bible days, Jesus on his journey and stuff, people gave. Nobody was forced to give Jesus, money because, this, that, and the third. But the free market took care of Jesus. Okay, the people donated their goods, and it was out of voluntary exchange. And that's the whole difference. What we're saying is that if people want to voluntarily give, then that's great. Or you have the government to force, robbing you to try to, basically what they do is take from the haves and give to the have-nots. That system can't last forever, right? Because what happens is you become hostile towards the people that produce the goods and services, and they will leave. And when they do leave, the standards of living for everybody gets worse. So that's why they have a hard time with politics with trying to pass certain things. And so some people who haven't studied these things are like, oh, yeah, you should just tax the rich and do this. It should be easy. But it's not. It's economics. I'm telling you, you got to look at it from an economic lens. Forget all the justice stuff, because who is just? In the movie Marvel, Thanos was just. He was God. He took liberty into his own hands to decide for everybody. OK, nobody got a vote or nothing. He killed Spider-Man right in front of you. You was pissed off. Like, oh, man, when he killed Iron Man. Tell me, weren't you mad? I was pissed off. How you gonna kill Iron Man, B? No, that's unacceptable. Okay. But anyway, that's what happened with these people making these decisions. And the free market, what happens is when you have a more free market system than America has right now, we got to remove all these regulations and stuff. Okay. People competing for business, it drives the cost of living down for everybody. So goods become cheaper. People complain about healthcare. Or you have, America's more of a fascist society because you have these companies, corporations doing the will of the government to get favors from the government, and they have protections. That is not capitalist. Those are not capitalistic policies. Those are fascist. And that's, all fascism, communism leads to socialism. They all go back to socialism. So, but when these companies, they got these red lines in certain places that you guys live, even your cable companies, you can't get some other competitor. Right? You can only get that cable company. And I guarantee you, wherever you are, whatever company you have, you're getting taxed. Okay. And the reason why you're getting taxed is because of the absence of competition. Capitalism is just competition, point blank, period. Freedom to compete. Okay. So what happens when people can compete? They remove the red lines from the states. They allow these insurance companies to compete across state lines. even the smaller companies can get in there and compete, and it drives prices down and society benefits as a whole. And that's the way we have to go. We have to go back to that. Okay, we have to get to that. We're going in the wrong direction. We're going in the way of the Soviets. We're going in the way of old China. Mao Zedong, he had all the stuff that people are saying they want now. They want free healthcare. They want universal basic income. Research Mao Zedong, China. Okay, China now under Deng Xiaoping and Xi Jinping, they changed China to capitalist because China was so poor and hundreds of millions of people died from famine because the central planners, the government, was trying to direct the economy. They had everybody to make steel and stuff like that, trying to compete with the West, and it didn't work. You didn't have enough people farming. You didn't have enough people doing things. In a capitalist society, individuals pursuing their own goods, it all works out beautifully because it all makes sense. Anyway, I don't want to go too further into it, but I'm gonna leave it there. Understand what system you're in. If you live in America, you need to have some education on capitalism, the Constitution, the Constitution, not the way we're doing it right now. Okay, we got a federal government that's out of this world and it's not even paying attention to the Constitution anymore. So, but definitely, we'll get into it. And if you guys have questions, I'd love to get into it. But that's my end of my spiel on all of that. Let's get to some stock trading real quick with some names, and then I'll release you guys for the evening. So we basically have, I told you guys earlier about financial stocks. So I guess we'll start there. Financials, this is the sector. XLF, financial sector. It's on the weekly chart. Let me just pull up a daily chart because it's bouncing right here. All right. So, all right. And I'm going to switch this over. All right, so from this high, we hit to this low, which was the ceiling of this 1618. So I just left that ceiling up here, and it's bouncing up right here. It's up against the 618, and we have a buy trigger that's here. Stochastics moving up. We're in a squeeze right here. This could chop around here because it's at a key level of resistance, or it could push through and fire off long. Again, the financials. What's the theme this week? Can you guys remember what we were just talking about? What's happening that's important? The SLR situation on the 31st. So I think this is really going to shape up this whole playbook on these financial stocks. And so when you take a look at these financial stocks, you can take a look at like CME. Okay. So CME, that's another, again, squeeze situation off the bounce, off the 50 moving average. It's up against this 618. Has a target up here around 222. Okay. If that plays out, if it reverses. So this is a bounce play. Bounce off the 50, needs enough strength to catch up, to go through here. But you need to see it clear this zone though, okay? This 618 is key resistance. Other names, I believe Citi is another name that's in there. JP Morgan, another name. This print, as you guys can see, the print is consistent with all the rest. Let me just remove that out the way. We got levels right there, same situation, all right? So boom, come down, bingo. You get that kind of move. All right. Let's take a look at the FANG stocks. And one of the FANG stocks, if you take a look at, sorry about that. Take a look at the NASDAQ. The NASDAQ is looking quite interesting, right? So the tech stocks, they have not been performing well this past week, right? They come and bounce off of here. They get chopped up in here and came down to the 100 moving average. So what I was telling you guys last week, the theme was, how's this going to play out, right? Because we got the 100 moving average floor that's still holding, okay? So what I was telling you guys, what we can see is a double bottom situation, okay? We can see something like that. But traditionally what I see when we see patterns like this, we come up against this resistance and we bounce down like that. So I don't really know how it's going to play out. We got some mixed signals, down, up. We got a squeeze that's in there that's real nice, but we got a trend that's going down. So it's a little choppy. It could keep on chopping around here at this floor. So it's a little tricky with these tech stocks. And I think what's interesting with the tech stocks is like Amazon. Okay. Amazon, again, it's that same tricky pattern. We talked about it last time where you come down, you come up, and it normally do something like that. Don't mean that's what it's going to do this time. But, I mean, we take a look. We got a triple tops here. We got one top, two top, three tops. We got a triple top kind of pattern that's going on here, right? That's real ugly, so I'm going to remove it. But still, you got this, triple top looking kind of pattern that's in here. And Amazon just can't seem to get right. Can't get right. All right. You remember the movie, was it Life? The dude name is Can't Get Right or whatever. So Amazon is in that stuck in that mode where it just can't seem to get right. And they pretty much go for like the rest of those FANG stocks. Facebook was actually looking good, but then it got wrecked also. And it's trading sideways. I think it's going to move a little sideways off of this level here. Apple, let's see. Same kind of situation with Amazon. Apple looks just like Amazon. You think, boom, okay, bingo. We could see something like that. So again, tech stocks still in, interesting situation where, again, we're seeing these growth stocks, which these normally tech stocks, and we're seeing rotation out of these into more value stocks. We're seeing that take place. So this is looking rotationary to me with these FANG stocks. Microsoft actually, again, looking like, it's chopping a little sideways. But I definitely would keep my eyes on Microsoft. I like the pattern a little better than the rest of them. So if one of these move, I believe Microsoft might be in that camp that'll move first. We'll have to see. With that, but take a look at Starbucks. So we had this play off in the group. Again, this is a good value play, a good value stock right here. We got a technical pattern in here, technical squeeze in here, right? Boom, squeeze in here, buy triggers in here. It's off the bounce play, bounce off that 50 moving average. You got a buy trigger in there. And I got some Fibonacci targets in here, but I got this analyst target that is actually going to be more important to me because I want to see how it's going to shape up against the analyst target. So again, this is, the analyst target at $116. Again, this is their target. Starbucks is that, wifey drinks Starbucks. I'm not a coffee drinker. She is. And you see the lines at Starbucks. They are cult coffee drinkers. They don't care. They're just going to drink their Starbucks. So long term, I think Starbucks, as of right now, they're doing good. But what's interesting is that when you have supply chain shock issues, with situations come out the Suez Canal, how would that impact coffee beans? They got to get the coffee somewhere, right? So, we'll have to see how that plays out. So I think Starbucks looks pretty interesting. EOG, right? EOG, one of the oil stocks, another interesting play with a bounce off of the 127 extension from this swing. Okay. And it bounced off that way. So almost symmetrical. And then you see it moving up. Got an $80 target on it. They saying that, oil in the Suez Canal situation, that whole situation is inflationary also. So, we'll have to see. But also, people are coming out and traveling more too. So, I like that theme as well. I didn't show you guys oil last week, so I guess I'll go ahead and chop into that. With Staples being up have anything to do with the ship blockage? Possibly. Yeah, Staples being up. I think more than likely, Dustin, is that the Staples are up because people are shopping. You go to the Target parking lot, go to Walmart, any of those places, and people are out shopping. They got this stimulus money, and where are they going to spend it at? Okay, because lockdowns are coming up. See, before they had to go to Amazon, right? And you notice how we see Amazon stock is real choppy right now. Amazon ain't really moving. Okay, so in the lockdown, Amazon was killing it because where else you going to order from? You can't go anywhere. But now with things opening up across America, people are going to the stores. It's something nostalgic about just going somewhere physically. Our movie theater is getting ready to open up for the the King Kong Godzilla movie that's coming out, and I can't wait to go. Me and my wife, we have movie night every week. We had the special theater that we go to, had the special butter popcorn, and it's normally empty, normally nobody in there. I normally have the whole theater to myself anyway, and I love it. They bring us food and all that stuff. It's nostalgic. It's a feeling that you can't get in the internet world. That's why I say, I know they want to transform this world to a full digital society, but that's overhyped and always under delivers. Me and Mark, we had a conversation yesterday. What I say, technology is always overhyped and always under deliver. And that is still going to be true. So just keep that in mind. Oil stocks, again, I was debating some guys about this whole oil situation. This gray box is, Biden's presidency, when he won the inauguration, when he won the presidency back here, oil was rising, ever since then. Texas situation hit. This is the Texas situation. We came up here, bounced, and we've been going down. And now we got the Suez Canal situation. I got my box highlighted already to see how oil is going to, play out. And we can see we got a buy trigger in there. We got the stochastic shifting up. We had this momentum going down, but more than likely the momentum is going to shift up that way. This is the 50 moving average. Price did not breach that, and we're seeing price starting to move up some more. Okay, so that EOG play, that's a play off of oil right there. You said look out for you and that joint, Keith. That's right, my man. That's right. So we got the oil stocks. Where Ron at? Ron up in here? Ron, you already know. Ron, for y'all don't know Ron. Ron is our beloved cup and handle. The Lord of the cup and handles is what I call him. Ron B, the Lord of the cup and handles. What you see right there, Ron? Yeah. I had to find one for Ron because this is what he do. All right, this is what he does. But this is a real nice cup and handle here. You guys can see the pattern. And bingo, Rockwell Automation. There was actually an analyst who came out with some stuff, with some research about, these companies. This is one of the companies on the list, about these reshoring companies. And this is one of those names. There's another one. It's a Bank of America analyst, by the way. And this is another one, Emerson. You can see that, boom, bounce off to 50. Boom, we got the squeeze, stochastic shifting up, buy trigger up in there. All right, that's the 50, the bounce, target $95. So that's another one that's up in there. And again, I'll take some from you guys. We got a few more minutes, so just drop about 2-3 names, and then we'll bring it to a close. Let's see another name real quick. Eaton Corporation, that's another one for you. Bingo. And I was telling you guys earlier about the real estate stocks. Let me just show you guys what that's looking like. That's what the real estate sector is looking like right here. Almost cup and handlers right there, Ron. Boom, and then boom. All right. So that's interesting. Real estate stocks have been doing anything. And I think utilities, again, utilities is they're looking a little better. Let me just go back to the weekly on them. Okay, so yeah, they got a squeeze on that. It's gonna be interesting to watch out because dividend players, they like playing those utility stocks. So again, if they start going to those utility plays, you may see that rise up. You like healthcare, PFE? Let's see. Yeah, healthcare did pretty good last week. All right. So we had some depressed pricing up in here, and now starting to roll back. Let me just remove some of these levels. I'll just take it, swing it from this high down to this low right here. All right, bingo. We can see from here, traded up here against the 618. Price is right here, and it's trying to breach through. Trying to breach through all of these moving averages and the 618 at the same time. So I think it's gonna make it, pretty interesting. I don't have a squeeze or any catalyst that can tell me that it can go up to my Fibonacci targets, but because I don't have that, we can gauge the 786 for the time being. I think it's still bullish right now, but momentum, you guys can see right here, momentum is going up, but now it's starting to go down a little bit. So I don't quite know how to make out how that's going to play out, but at least to the 786, I think we can get there in the volume. Okay, so volume, and I don't have the volumes on my chart right here, so I'm not going to go through putting that all in there. But yeah, good look, Dustin. And GILD. Okay, it's still stuck up against the 200 moving average. Shoo. But it's got the squeeze. So the question is, can the squeeze pierce through there? That'll be interesting. If the sector moves up, then I'll suppose that will move up too. In fact, was it Jonathan in the group? Somebody, not Jonathan, I think it was Chris. Chris is talking about this Gilead company. We got fundamentals in the fundamentals analysis group on the website. and I dropped some fundamentals. Something about, I think, the HIV drugs. Gilead has like a, they have a moat on it. So there's some analysts that got, I guess, some good information. I don't think Chris is here tonight, but anyway, on the website, take a look in the group. Where is it? Fundamental analysis. I posted right here, the fundamentals. So if you want to trade the Gilead situation, Ron, or anybody else, pull it up in the fundamental analysis group, okay? And you'll see it. Just go to the group and scroll through the feed, and you'll see it. Also, remember, when you're on the website, you can always, search through the little search feed right there too. And you got another search feed right here. So those are places that you can go and search for whatever you're looking for. All right, so TMO got a squeeze on it, you guys can take a look at, let me actually just show you real quick. So this Thermo Fisher Scientific, this is another one of Ron's situations here. We got this 200 moving average floor. We got a buy trigger right here. It says, hey, buy me, buy me. I ran a swing on this one from this low down here to get this extension right here as a target on this bad boy. So I think that we can get all the way up there from this low. Again, major resistance is going to be up here at $500 at the 618. But you can really make a killing if it can, get up here. All right, it's in the squeeze. It's got the triggers. It's got the trend. I actually like this setup. It's in the Wallstreet Jackboyz trigger scan, the scanner that we have right here. You can see TMO is right there. And again, you see a lot of good names with good setups right here in the scanner. If you don't have this scan, let us know or let me know, what have you, and then I'll make sure to get you the scan so you can check the scan out for good plays all day, every day. I'll take one look at one last one from my man Dustin. We'll call it a night. All right, so we have Yum and Yum Brands. Again, Yum Brands, I think they make this is the food stocks. The food stocks, it's got like a little flag in here. It's trying to flag out a little bit. But I don't really have a good situation on this right now that I can really call a good play. I can see that it's bouncing off of the 20 moving average. We can see the price is right off of there. And it's got a little hammer play. It's actually a little hammer candlestick, but we'll have to see how it's going to play out. I think it might chop around a little bit before it go up. We see momentum that's kind of going down a little bit. But you know what's even better, though, Dustin? I'll give you another one. How about, instead of doing Yum, how about DRI, Darden Restaurants? Okay, I remember seeing this one. And so you want to make the food plays, people eating out. Red Lobster and all of that. Yeah, y'all eating out. You are. So here go a good situation right here. Good play up in there from the swing high to that low, right off the 50 with a buy trigger. Look at that buy trigger. Look at the stochastic shift up. Look at the squeeze that's in there. Bingo. All right. So I think we can get to about $155 target right there. Yeah. So definitely check that one out. Darden Restaurants, that's actually definitely like a good play. So it's lots of setups. I hope to see you guys in the chat room this week. I know I was out on vacation the prior week. And so when I'm not present, some people don't want to show up. I was actually showing up from my phone. Although we don't have the app, you can still access the site from your phone. So I don't know if you guys know that or not, but you can access the chat and everything. You get notifications, all that from the phone itself. So once we expand big enough, then I'll go ahead and launch the app because again, it's expensive. But we got to have enough members for that to even make sense for me to even go and invest money into that. But right now, you can use your handy dandy phones and all that stuff. So I expect to see you guys show up and, so we can show out, and for those people that are new, before we close, I'll just show you when you go to the website, you just basically want to make sure that you go to your dashboard or you go to the news feed. Dashboard is here. You go to your news feed right here. This is where I'm at all day, every day. I'm in the news feed, right? Because I'm posting stuff, but I'm also looking for things that you guys may post. I don't want to miss a beat. So when you post it, it'll go into the news feed right here, where you can see news feed. Plus, I need to know what the hell is happening this week. And so it's right there, right front center. But all you do is look for this little bubble right here. This is your chat bubble. Okay, bingo, bingo. Every other stock trading group out there charge, from $100 to $300, $400, $500 a month for a chat room. I provided a chat room for you guys for free. So make sure you utilize it. Again, every year I plan on making Wall Street Jackboyz better and better. If it makes sense for me to keep doing it, y'all ain't gonna show up. Ain't no need for me to keep on, doing it. But if you show up, promise that we're gonna take this thing to the next level. We're gonna keep on taking it to the next level. So make sure you jump into the chat room. It's free on a daily basis. If I'm not here, that doesn't mean that you need to disappear. Other people here, Jonathan show up every day, Mark show up every day, Ron show up every day, other people show up every day. So it'd be somebody that's in there. If they're not, then you sit in there till somebody get in there. Okay, you just have it on your phone. You hear a little vibrate, boom, or hear a little ding that lets you know somebody in there. So definitely like to get you guys back in the gist. If you ain't learning, you ain't earning. But that being said, you guys have a good night. Catch up in the markets tomorrow. Peace.